Well, folks, as of right now and over the next several months, I think a lot of stock market investors are going to make the worst financial decision of their entire life. And I want to explain exactly what's going on here, what is transpiring, the decisions certain folks are making right now, and why this will ultimately be the worst financial decision they'll ever make in their life. And I want to explain exactly how this all plays out. Hope you enjoyed today's video as always. If you aren't subscribed to this channel, hit that subscribe button. It's absolutely free. All we do is talk stock market all the time. At the front here, I actually want to tell you guys a story, because this story, I have a close friend, and I want to explain this story to you so you can kind of understand exactly what happens in the mentality folks get in a situation, okay? And so I have a friend here in Las Vegas, and he bought a house, unfortunately, in 2006, late 2006. And if you know anything about the real estate crisis and the real estate bubble, you know that Las Vegas got hit harder than pretty much any city out there, any city in the United States of America, right? Las Vegas just got absolutely devastated. And our real estate, I didn't live in Vegas at that time. I moved out here in about 2015, but real estate in Vegas got so bubblicious in 2006, 2007. Like many markets in the United States, Vegas was just kind of the biggest, right? And essentially, if you bought real estate in 2006, 2007, you were down crazy amounts of money just a few years later. And when he bought, the median price was around $306,000. Well, unfortunately, the price of his house ended up tanking really, really bad. And he ended up, I can't remember if he foreclosed on it or he did a short sale. I can't quite remember that. But he did it around the end of 2008, beginning of 2009. And the median price at that time was around $165,000, $180,000 or so. And actually, the median price continue to fall after that time. Now, my friend, he was so unbelievably kind of tore up by this whole situation, which you can understand. Like, you buy it was his first house he had ever bought here in Vegas, and he lost a ton of money on it. And you can understand kind of the devastation of losing a bunch of money. The down payment he put on the house and those sorts of things was just gone. And, the house went down so much in price, it just made sense for him to foreclose or do a short sale. And so you can understand him kind of being in a bad spot when it comes to real estate. He got burned. Let's just call it what it is. He got burned. Okay. So, in a very sour place around real estate. Now, he was in the financial position to buy back into real estate 2010, 2011, 2012. And at that time, the median home price in Las Vegas was around $125,000. And he was in the financial position to buy back in if he wanted to. And he chose not to. And he chose not to in 2012, and 2013, 2014, and all the rest of the years. And never has bought back into the real estate market, right? And here today in Las Vegas, the median home price is around $430,000, right? And so you had all these years, 2010, 2011, 2012, 2013, to buy a house and buy a piece of real estate and something that you could build equity in over time. And he chose not to do that, right? Which is the cardinal sin of, caring about money essentially in the United States of America. Because what is, they're going to always print money like crazy. In bad times, they're going to go extra crazy with the printing of money. That's something we do know. That's just how it always works out. And real estate in the stock market is a great place to be over the long term. You're going to go through some dips. This was very abnormal for the real estate market to drop this much. That doesn't usually happen. But for, how insane things got during that particular time period, and then going into a massive recession, it was the worst case scenario essentially played out for real estate. So that's why it was such an epic drop. That's not normal. You can get time periods where real estate prices go down. Not like that. That was like, I want to call it almost like a one-off event, right? And so, he missed out on obviously making a ton of money in real estate over the last 10 plus years because he had basically been burned, right? And he had a sour taste in his mouth, and he's like, screw real estate, I'll just rent, right? And never mind that, you end up throwing money away toward renting all the time, right? Now, let's go back to the tech bubble. That was an insane, crazy one-off event. Even in the hype cycle we were in at this time last year in January 2021 in the stock market, valuations weren't even remotely close to being what they were in the tech bubble. Also, during the tech bubble, you had companies that didn't even have business models, didn't even have revenue, and they were trading at, billions of dollars of market cap or hundreds of millions of dollars of market cap. That was a crazy market. Even, like I said, the most insane market I've been in the past 14 years was the market we were in a year ago. But that market was like lame. That was a lame market compared to how insane the tech bubble was, okay? But let's say you got caught into the hype cycle that was the NASDAQ at that time. The craziest, dramatic, bought market in the history of mankind during the tech bubble, right? Where valuations were insane and business models were non-existent, but people were putting money in it. It was, reminds you of a little something else going on in another market, but we're not going to get into that, okay? But let's imagine you got screwed in this whole situation. You bought into NASDAQ at 3,000, 4,000, plus, right? So NASDAQ drops like a rock because obviously the stock market can only stay unsustainable for so long. Whether you're talking about underpriced or overpriced, it only lasts for so long, and then you have to either come down or come way up depending upon if you're way underpriced or way overpriced. So you buy in, let's say you buy at 4,000 NASDAQ. Well, you could have went down to 2,000 and sold it all, or 3,000 and been like, screw this is a scam. Stock market's a scam. This is the worst thing in the world. Oh my gosh, I lost money, right? And just been like, I'm done with the stock market. Or what you could have done is, let's say you bought literally at peak, right around 4,000 or so, right? When it drops to 3,500, you could have bought. When it drops to 3,000, you could have bought. When it drops to 2,500, you could have bought. When it drops to 2K, you could have bought. When it dropped to 1,500, you could have bought. When it dropped to 1,100, you could have bought, right? And you could have bought as it went back up to 1,500 and 2,000. You could have kept buying it over, a course of several years. And the fact is, if you had done that strategy, you made out like a bandit. And that's even with buying at the worst prices possible. Think about that for a moment. You could have bought at the worst point of the tech bubble. And as long as you bought along that massive dip and just kept buying and buying and buying, you were looking phenomenal. Literally, you could have taken a paycheck and put some money in, put some money in, put some money in, put some money in, just throughout all those months, all those years, buying, right? Now, let's say somebody else comes in the market at the worst time possible, which wasn't, let's call it the second worst time possible, which was 2007. So you come in the market in 2007 and you buy NASDAQ at the peak of 2,500 or whatever it was at that time, right? And next thing you know, the Great Recession happens and you get absolutely destroyed, right? From NASDAQ 2,500 or so to next thing you know, NASDAQ's at, 1,400 or whatever it went down to, 1,300. I can't remember exactly how low it went in 2009 at the depths when it was March of 2009, right? So you got absolutely devastated. You were down 50%, right? But what if you had just been buying during that time instead of just sell out and be like, screw the stock market. I'll come back to the stock market someday when it's safe, right? Because you could have said that because I'll come back some other day. How many people actually come back, right? And instead of, you could have just been buying as it went down, every 5% down or 10% down, you could have bought. You would have been way down on cost basis. You would have back to break even here. And then you could have went on this epic run over the past 10 plus years if you just bought the dang dip, right? And so think about that for a moment. Even in the worst times, the worst possible time, the most bubblicious time, even as long as you're buying the dip on the way down, you make out like a bandit in the end. Never mind, you're buying it as it goes up over the coming years. And even once you go above, right? Oh, we're back to where we used to be. Now, all of a sudden, by the time you're back to where you used to be, right? When you start buying at the peak, now by this time, you're probably doubled up your money or so because you've been buying the whole dip down, right? So now when you get back to that same place, now you've probably already doubled up your money. Like, think about how epic that is. And then you go on this epic run over the coming years. And that's just in the NASDAQ, right? That's just in the NASDAQ. Think about it in terms of an actual stock. So we look at something like Amazon stock, which Amazon's obviously a beast of a company, but it always wasn't respected the way it is respected today, right? Where it's like $1 trillion plus market cap and everybody respects it. But it always had this, it was always giving you the signs of this is a game-changing company that's going to be huge over the next coming decades, right? So in Amazon, if you had bought it even at its peak of the tech bubble, which is crazy to think about, you would have went down about 90%. If you'd bought it at literally the exact peak, all the way down to the trough, you would have been down about 90%. But what if you had been buying as it was dipping the whole way, right? And that was once again, the most bubblish market we've ever had in modern history. Actually, not in modern history, in all history of the stock market, right? And you could have been buying all the way as it went down, all the way as it came back up, all the way throughout all these years, right? I was counting them. And what I found is I literally just stopped counting because I was already at 20 plus drops over Amazon stock prices history. There's been 20 plus drops of 20% plus downward moves. Every single time the stock dropped 20%, 30%, 40% peak to trough, you could have ran out of the stock and been like, oh, this Amazon company, they suck. They're horrible. Look I'm down 33% on this stock. I bought it at this price. Now I'm down in this price. Instead, you could have been looking at the business model and realized, oh, this is a great business model. They got a huge future going in front of them over the next 5-10 years. They got all this stuff going, Here's where the trends are for this industry. Here's where things are expected to go over the next 5-10 years. They're the number one player in this market. Oh, they got this Amazon Web Services that's starting with this cloud product that looks like it's in front of all the competitors. And that seems to be in big industry that's going to grow exponentially over the next 5-10 years. There was all this laid out to you, right? That you could have went ahead and said, oh, let me buy this stock. And like I said, you could have bought it at horrible times. And the next thing you know, you're down 20, 30, 40%. As long as you kept buying the dip and buying the dip, you made out stupid money. Stupid money. As long as you own a great company that has a tremendous future in their industry, you got to buy these dips. And if you drop out of the stock market, it's the worst financial decision you could ever make in your life. And I think that's a part that a lot of folks don't understand in this market, and it's so unfortunate because a lot of folks drop out of this sort of market. They drop out and they never come back. And they look at this and they're like, dude, the stock market sucks. I lost $5,000 in that crap. I lost $3,000 in this stock. I lost $10,000 in this stock. I lost $20,000, $100,000, whatever, right? And instead of realizing if you own a great company and you buy the dip all the way down, and you buy it all the way back up, you're gonna make stupid money. I've never seen it. I've been doing this for 14 years, and I could go back to way before, the 14 years before I got in the market, and the 14 years before that, and the 14 years before that. I've never seen one stock in the history of the stock market I've ever studied that the business model was a great business model and they grew revenues and they grew net income over the coming years, and especially if they did exponentially, that they didn't see their share price go up massively. And so it's the most frustrating thing for me to see a moment like this when we're in the stock market where things get rough. A lot of stocks go down 30, 40, 50, 60, 70%. And people end up dropping out and saying the stock market's a scam. This whole thing, it's just a bunch of crap. And they drop out and they never return. And that's exactly what's been going on the last few months. And that's exactly what's going to continue as long as this market stays rough. And then we'll have some sort of big bull cycle again that will catch people's attention, although those don't come that often in terms of that super cycle where it grabs everybody's attention. And then it'll attract a bunch of people. Then a bunch of people will lose a bunch of money and think the stock market's a scam again and jump out of this thing. And then, all to see the indexes go up massively over the next 10, 20 years, all to see these great companies that people have jumped out of that had tremendous futures, all to see them rise rapidly and their stock prices 2x and 3x and 4x and 5x and 10x and 100x, and then be like, oh man, remember when I was in ... stock and I sold out because, I was down on that and I was down, I didn't want to hold it anymore. And, that's the most frustrating thing for me to kind of see in this sort of situation, because it's going on right now. It's going to continue to go on as long as the stock market's rough. So it's a piece of cake. Like in the stock market, it's a piece of cake if all your stocks do is go up every day. That's not hard. If just stocks go up every day, of course, everybody can do that. Anybody can do that because there's no volatility. Only volatility is, oh, I made another $1,000 today. Oh, I made another 5,000, another 10,000. These are the sorts of markets that make or break people. When you've got 2/3 plus of the NASDAQ stocks in bear market, when you've got an all-time high of stocks down 50% plus, these are sorts of markets that make or break the future investors that are going to make a fortune over the next 10, 20, 30 years. And the ones that get shaken out of this market, they're not going to make the money. And the ones that stay in and the ones that buy the dip in great companies are going to they're going to be the ones that make all the money in the end. And so, you got to ask yourself, what do you want to do in this situation? Do you want to own great companies and buy the dip, or do you want to get out of the stock market? That's all it comes down to. So, anyways, guys, much love as always. Hope you enjoy a little video like this. I think these sorts of videos are really needed in this sort of market. I like to bring in real life examples of like friends and family members that I've seen go through different things, or myself, right? Where, somebody makes a decision like this and they just realize like, oh man, here I am waiting it out or getting out of this market because I got burned in it or something like that. I bought at a bad price. and now I'm done with it. And it's like, it's the worst decision you could ever make. Bottom line, what are you going to do? Go to all cash? You're going to go to all cash? If things get rough, what do you think they're going to do? Money printer, like they always do. So the only scam is if you're always all cash. That's the only scam, because your money's constantly being devalued and will constantly always be devalued. Look at inflation over the past year. Whew. Yeah. Much love as always, guys. Don't forget to subscribe if you're not subscribed already, and have a great day.